Can you guys understand my Idaho accent?
What now?
Well, thank you, everybody, for joining us today on the Alliance Group podcast. We're really excited to have our guest today. We really have somebody that's special and an icon in the industry. And when I say icon in the industry, I'm not saying that lightly, because our guest today really is somebody that has changed the way we do business from a lot of the different things that he's helped initiate with regards to marketing and creating new markets. So with that, I would like to introduce Mr. Samuel Foti.
Sam, please.
Sam,
Thanks,
okay,
Steve.
Perfect. Yeah, you don't call me Steven. That's usually cops and judges call me Steven. But with that, I really want to dive into to what Sam has put together, the company that he represents and what he does. Sam, tell us a little bit about that background and how you came to work with iTrust and what you're up to these days.
All right. So you want to hear the entire boring career path?
Far from boring. Having known you now for the better part of this last year, far from boring. And again, when I say an icon, you really do have the pedigree that is something that our listeners should take note of and listen closely to what he has to say, because no more insight can greater access to insight than what Sam has to give us today.
All right. Thanks, Steve. Yep. First, a little bit of background. I've always been in the insurance industry from the beginning. Educationally, I went to the University of Penn's Wharton School, majored in finance. Also got a master's from Penn in public governmental finance. Then went off to University of Oxford, studied law. And then I was looking for an industry to enter, and I wanted to find an industry that had traditional values, supported the community, but also had a sort of a locked-in culture with respect to how it approached the marketplace. And I literally picked the insurance industry, and I didn't want to enter it on the home office side. I wanted to enter it on the field side, so I went into sales. Spent a little bit of time in sales, then became a field sales manager, then a field agency manager, and then I was making too much money, so the home office convinced me to come in. And my first assignment in the home office was to run the property and casualty line. After that, I began to create some subsidiaries within MetLife, which was my first company. I created a company that brought the products of other carriers to our career force to supplement their system. Then used the ability to take MetLife's products out to the independent distribution system. This is all ancient history time. And then we went a step further and began to create alternative distribution methodologies for the Met. We purchased Century 21. We purchased the fifth largest mortgage originator, and I was responsible for building an insurance operation that specialized in working Century 21's clients and integrating the mortgage facility into the insurance practice. So we sold life insurance, property and casualty to a lot of people through the Century 21 system. After that, I came to the Mutual New York, first as senior vice president responsible for distribution, then responsible for all marketing. Then I became an executive vice president with money, was responsible for the entire insurance operations, then became a member of the board, then became the president of the company, and I was the president of the company for 10 years until we sold the company to AXA Financial in a transaction. iTrust Advisors was born from all the years of experience I had. We wanted to create an advisory firm that not only provided products for producers and advisors, but also provided unique level of advice. And that was the birth of this dialogue and our eventual partnership.
So with that, a couple of different things that we were talking earlier, and you were sharing with Lee and I about, talk about being a pioneer in the business, that you actually have some patents that you've created with regards to life insurance and some of the ways that we do business. And again, that's not to take lightly. That's pretty impressive.
Well, Steve, the thing that always struck me is you have the Wall Street crowd, which looks at financial investments as financial investments, but there was this avoidance or a lack of acknowledgement that life insurance itself is a financial instrument. So the patents that you're referring to, we have two. They're designed to manage a portfolio of life insurance policies to maximize internal rate of return on cash. And interestingly enough, they're also designed in two ways: one without leverage and one with leverage.
Which ties into something we're going to get into in a little bit here, where I think iTrust can really be an advisor for the Alliance Group. And one of the things that we talked about in previous conversations is you see one of the philosophies of iTrust as iTrust being an outlet for, so to speak, in a way of an advisor to the advisors. And tell us a little bit about how your role in that is with iTrust and how you position yourself with advisors and then helping them do the best job possible in creating portfolios for their affluent clients.
Well, when you look at my career, right, it started out in retail sales, advising my own clients, and then moved through the process of creating a sophisticated support structure through an insurance company to support our sales professionals in terms of meeting the needs of their clients. Philosophically, we look at the planning process as an integrated process. We want to know that we're using life insurance to provide all the wonderful, robust benefits of that product: asset accumulation, potentiality for preferred tax income, potentiality for creating an estate through death benefit, and what you guys are so good at, all the living benefits associated with it. So we look at it as more than just an insurance product. We look at it as a financial investment. As such, we have a planning philosophy, which says basically, if it is an investment, it should be looked at in terms of all the assets complete of the client, and how does it perform within that structure to achieve the client's needs. So our advisory model goes and says, how can we help you as a professional advisor, whether you're a lawyer, a tax expert, or a life insurance professional? How can we help you design a plan that allows your clients to achieve their goals? And typically for an affluent person, those goals are a few things. One, I'd like to make sure that I accumulate as much as I can over my lifetime. Two, I'd like to have security when I age and a sufficient level of income. And three, I'd like to know that I have the ability to provide an efficient and effective way to create internal rates of return, either on death benefits or on my entire asset portfolio. So we look at a client's entire assets, and then we look at how they can use the financial tools and strategies that Wall Street has always applied to their own activities, i.e. debt, to maximize the benefits that we provide.
And where we are in the economy and with inflation and different things now more than ever, these are really important conversations to have. And the cornerstone for so much that we do and so much that we want to talk to our clients about is that very thing. Tell us a little bit about, in the planning strategies with iTrust, how dynamic and static planning come into play with regards to the sophisticated modeling structure that you're putting together.
Yeah, so let's take an example. In the industry, there's a thing that's been called premium finance. Mm-hmm. And premium finance is nothing but taking a debt against a policy and leveraging that policy in a way that provides maximum death benefit and maximum internal rate of return on cash. We think that's a very simplistic way for an affluent person to look at their goals. We think that if they have a slew of assets, whether it's bonds, stocks, life insurance policies, real estate, commercial real estate, their own small business, whatever it is, there are ways to utilize leverage to fulfill the life insurance need. And there's a way to do it dynamically over time. Typically, a leverage transaction in our business called premium finance was always a one-time transaction. Here's what you want to do. Here's why it's good. We'll take the debt. You'll have this illustration over time, and here's the end result. And that's good. Yeah. But that's not as good as saying, we will create an advisory model for you so that we'll come back every year with you and review the impact that's occurred on your portfolio overall, determine whether the life insurance solution still fits, and how debt should be played, whether it should be continued, discontinued, or modified.
And the reality is that portfolio itself, the different pieces of it move differently. And although they may fit together nicely today, one of those allocation sectors may outpace the others, and you need to readjust it.
Readjust.
And again, with regards to iTrust and how you work with the affluent, with this ongoing change and ever-changing growth and remodeling of that, how do you work with those clients in the affluent market going forward once you put something in place?
So, simple illustration, right? So let's say that we're currently in a low interest rate environment, which we are not, but let's assume that we are. And the old premium finance transaction would have been a simple interest loan, against the transaction. Here's the end result, benefits for your clients. Okay, that's great. Right now, we're in an inverted yield curve where debt is more expensive in the short term, cheaper in the long term. In that environment, the old principles don't apply, right? And that inverted yield curve is not necessarily static. It moves. It either gets dimensionally higher or reverts back to normality, low rates in the low range, high rates in the high range. We want to be in a position that we're looking at all those movements, working with the advisor and saying to the client, let's adjust either the level of debt, the interest rate associated with the debt, or the assets that are supporting the debt, potentially even discontinuing debt for a few years, and a dynamic model. As a result, we minimize risk for the client in the transaction. And we also maximize what we like to call risk-adjusted return.
Yep. I was just going to say that's the risk-based performance tied to that, to both sides of that are really at the base of everything that we do. So is there anything else you see in the market today that you think that we should talk about with regards to that inverted interest rate and inflation, and where you see using this tool of premium financing in today's market? Is there anything that, there's a lot of people that are a little worried about where we are right now. And some of our conversations that we had is the best time to do premium financing. The answer is it depends on the situation. It depends on everything. It depends on the portfolio and the assets and the play and the risk and everything involved with it. So can you tell us kind of from your perspective where you see where we are today in the marketplace in this arena?
Yeah. So, if you looked at short-term interest rates being high, long-term interest rates being low, the current scenario right now, the last time that occurred was 2007 in the fall. And everyone sort of remembers what happened in the third quarter of 2008 as a result. Usually that's a signal from the marketplace that something's going on macro level. The bond market is saying we have a problem. Okay, that's fine. For a typical insurance premium finance approach, they would say a high interest rate short term, we shouldn't do financing at all. Mm-hmm. And that's legitimately an answer, but it's an unsophisticated answer. The question is, if the client still has objectives they want to achieve, and they want to achieve them in the long term, it's financing, but it may not be on a life insurance policy. It may be on an asset, a different asset, real estate, a bond portfolio, their actual business. So financing is just simply a tweaking methodology to apply maximization of return. And it moves in terms of its need with interest rates and with the portfolio that the client has, which is why we're so focused on a total planning process, not an insurance-only planning process. I'll give you an example. Hedge funds. Hedge funds, a lot of people don't understand how they generate return. Well, they generate return using leverage. So if I give a hedge fund $100,000 to invest of my money, they take that $100,000 and pledge it and borrow another 100, 200, or 300,000. Now their portfolio return is 8%. If they didn't do the borrowing, they'd provide me $8,000 return. But once they borrowed another 100, 200, 300, they're getting 8% on each of those incrementals minus the cost of debt, let's say 6% or 5%. So I'm now getting my 8% return plus the spread on those other incremental leverages. We would never advise any of our advisors to lever up a client 1 time, 2 times, or 3 times. But a reasonable amount of leverage in support of a reasonable long-term goal with a dynamic plan is what we provide to the marketplace. And it always works, no matter what the macro conditions are.
You know, there's a solution to every problem, and sometimes it takes a little bit of creativity to find the right tool in the toolbox.
Exactly.
So, and you guys obviously take it to the next level with regards to the sophistication and what you're doing. So Sam, I got to ask you, you're here with us today.
Yes.
Can you please share with us the most exciting thing about what's happening with iTrust and happening with you today?
Not to be corny, but the most exciting thing is being with you today.
Oh, well.
The concept of working with your group and the sophisticated level of marketing that you provide and the sophistication of your producer network is exciting to us because our story is really not a traditional life insurance story. Our story is really, we want to apply the tools that Wall Street applies to their own portfolio. We want to apply it through your advisor network to their clients' portfolios. And the utilization of debt is just another tool to maximize the impact of the advice. And we think, based on our backgrounds and experiences, that we can create an integrated portfolio that works for your clients. So we're thoroughly excited to be with you and thoroughly excited about the opportunity of working with your network.
Sam, the pleasure is all ours. It's an honor, and we're grateful to have you. And I'm excited about this relationship that we're building and the opportunities and the expertise that you bring to our advisors. That advisor to the advisor aspect is something that, I'm very happy and grateful that we've joined together in creating something that, from both the marketing perspective and then also all of the experience and high level of sophistication that iTrust brings to the market, that I think us and all of those agencies and agents and advisors that work with us are better off for it. So thanks to you and thanks to iTrust. And with that, I appreciate you all joining us here on the podcast today. And we're looking forward to having you back to learn more about the Alliance Group and all of the things that we're doing. Thank you.
Thank you.
Listen to this interview and more on the Alliance Group podcast.